Good morning. Happy Friday, the 18th of September. I'm Jessica Amir, market analyst with Bell Direct. Well, US equities had their second straight negative session overnight, while stocks managed to end above their lows for Thursday. What is important to note, though, is this overarching theme is continuing, where investors are continuing to rotate out of tech stocks, which are trading at historically high price to earnings ratios, and tech stocks have run about 60% over the past 5 months, and they're instead investing into economic growth-tied stocks. That explains why we saw Facebook, for example, fall 3.3%. PayPal and Netflix lost about 2.8% each, while 3M, Walgreens and Caterpillar rallied for their third straight day. What also took the wind out of overall market sales was that US weekly job claims rose by 860,000 last week. That was more than the expected 850,000. But the silver lining is that it's the third straight week now that unemployment numbers have been under 1 million. So the big picture is indeed improving. As for how the major indices wrapped up, the S&P 500 down 0.8%, the Nasdaq losing the most, 1.3%, while the Dow Jones closed lower for the first time in 3 days, losing about 0.5%. On the commodity side of things, oil has extended its rally, putting on 2%. It's now at $40.97 US, as Hurricane Sally is keeping US output shut off, while the peak oil body, OPEC, has said that it will crack down on countries that aren't complying with cutting production as planned, all in a bid to bolster and support the oil price. The gold price has lost about $17. It's now hit a week low, 1,950 US. So keep an eye on gold stocks today. And the iron ore price has continued to fall from its almost 6-year high. It's lost about 3% yesterday. So given iron ore is our biggest export, its pullback is now holding back the Aussie dollar from breaking above 73 US cents. So keep an eye on FMG today. Also keep in mind that BHP and Rio Tinto both closed lower as they're listed in London and New York, so all closing lower on those international exchanges. What else to watch? Well, so far this week, we know the Aussie market has put on about 0.4%, which puts the market on pace to close high for the first time in 6 weeks. Earlier, the futures were suggesting the market would rally this Friday morning by 0.3%, with the focus being on Victoria COVID-19 cases declining. As for trading ideas that might be worth a look, Centuria Industrial REIT, CIP, Integrated Research, IRI, and NZME, NZM is their code. Those three stocks are giving off bullish signals, and that's according to Trading Central's charting, so they may be worth a look. Elsewhere, Immutep, IMM, is an immunotherapy business fighting metastatic cancer, and they were initiated as a Bell Potter speculative buy with a 60-cent target. That implies an almost 180% rally over the year if it comes to fruition. Now, IMM's phase 2 clinical trials have been encouraging, and the company is also flying under the radar, despite working with some of the largest biotech companies in the world, including Pfizer and Merck on their trials. So they could likely be a takeover target. Beside that, the company is indeed standing on its own 2 feet. However, given it's a medtech, it's not making any money, but its lead candidate, called LAG-3, has the potential to become the third pillar in treating cancer. This is why IMM is a Bell Potter speculative buy. And Beach Energy, BPT, may be worth a look. It was called out as a high-risk buy by Citi with a 194 target, as it's generating higher levels of cash than its peers and also selling higher amounts of gas. Citi says that BPT should generate $1.1 billion in free cash flows, which is worth about 30 cents a share to the company. So that's BPT, a Citi high risk buy. Also keep in mind UBS's oil picks are OSH, ORG, STO, WPL and WOR. Stay safe, happy trading. I'll see you for the weekly wrap.